Trading in Naspers shares has been halted and it's currently in auction. The share price is down 13.1%. According to news reports, Tencent faces a record fine after China's central bank discovered that its WeChat Pay had violated money laundering rules. The People's Bank of China found Tencent's payments platform had allowed the transfer of funds for illicit purposes such as gambling. Meanwhile, its subsidiary Process is down by 12.2%. The price movements have reignited concerns about the risk posed by China.
It's always disappointing to see a share price that composes such a large portion of certainly the South African exchange, but also so many retail investor pensions down as much as it is. It's always a little bit shocking when you see it, especially given the incredible performance that it's delivered, let's say, over the last 20 years. But as you said, there's just so many moving parts to the story. On the one hand, you've got obviously reports surfacing around regulatory changes and a potential antitrust fine. They haven't yet put the quantum on the antitrust fine, but they're talking about a fine in terms of record levels because Tencent, through its WeChat Pay, has essentially contributed to Know Your Clients, the KYC regulations in China. That's kind of casting a pall over the stock, but at the same time, the stock's actually performing only down 13%. If you compare it to some of the other Chinese tech companies, Baidu, for example, down 17% today. Now, that's not got anything to do with the specific stories around Tencent. It's got to do potentially with two aspects. The one is the idea that 17.5 million people went into lockdown in Shenzhen and the rise in COVID cases in China. China's obviously followed a much more stringent lockdown policy than the rest of the world, and you get the sense that the immunity levels are not as high in China, and this could be a persistent issue. On the back of that announcement, we saw the likes of Foxconn having to shut down factories as well. Foxconn obviously making Apple phones. So disruptions to the supply chains are going to be real. But I think the other thing that really has spooked markets around the tech sector in China is the idea that Russia has reached out to China for military aid. And if we see a bifurcation, so a division of the world powers and a new global order almost arising after the Ukraine-Russian conflict, and China is backing someone like Russia, and we see that more like that backing more overtly coming to the fore, I think that's going to have incredible ramifications for investing in China in general. And so many of these Chinese stocks are listed via the American Depository Receipts Program, so ADRs in New York. And already there's real concerns that these types of investments won't be accessible if we were to see, let's say, heavy sanctions on China somewhere down the line.